Hey, I'm Adam Dusko from ProudMoney.com. In this video, we're going to look at the difference between FICO credit scores and VantageScore credit scores. But before we do that, I would ask you to please subscribe to our YouTube channel if you have not already. And if you have already, I thank you for doing so. So there are two main credit scoring models in the United States, FICO and VantageScore. Why are there two of them? Why is there a difference sometimes when you see your credit score between the two of them? That's what we're going to talk about here. And the best way to kind of start this off is to look at the history here, and then you'll understand why there are two, and it will give you a little good background here. So FICO is the originator of the credit score model. FICO is sort of a nickname or a pared down name of Fair Isaac Company. They came up with the idea of the credit score, basically taking the information that a credit reporting agency might have and using an algorithm to actually create a sort of more user-friendly number that would give an idea of, a potential customer's trustworthiness to get a loan, to get a credit card, to get whatever. So FICO is the originator of the credit score. Now, the way it sort of works, FICO makes its money by licensing that credit score so that lenders can make those decisions more quickly. So what they do, though, is they work through the credit reporting agencies, Experian, Equifax, and TransUnion, and a licensing fee is paid to FICO for every time one of the credit scores is pulled. Well, over time, these credit reporting agencies kind of got tired of paying licensing fees to FICO every time they used it. They're going through, millions of times these things are getting pulled, and they're paying licensing fees to FICO to do so. So what they did is the three agencies, even though they're sort of competitors, they actually came together and they created the VantageScore. Now, initially when they created it, they kind of came up with a different scoring range, and over time they changed it to basically match the scoring range of FICO for the most part. Knowing that history, you see it's sort of a strange arrangement, because now you have the credit reporting agencies who have created their own credit scoring model to compete with the credit scoring model that they are actually offering to lenders from FICO. But the lenders who are familiar with FICO don't necessarily want the VantageScore because they know what they're getting more with FICO. So there's sort of been this push-pull over the 10 or 12 years since the VantageScore showed up between the agencies wanting to push the VantageScore and their lenders still wanting the FICO score. So what that means for you is you're going to see both in the market. You're going to see the VantageScore, you're going to see the FICO credit score. You're not necessarily going to know why they're both there and what one means versus the other. The thing that you probably should know more than anything is that FICO is the clear leader still. They are still the vast majority of credit scores that are being pulled are still going to be FICO scores in terms of making a decision on your credit card application, your mortgage, whatever. So FICO has, VantageScore has made some inroads here and there, but for the most part, FICO is who you're going to see. So when you are looking at your own credit score, getting it free from somewhere online, it probably makes more sense for you to understand what your FICO score is than it makes sense for you to understand what your VantageScore is. Now, it's not necessarily across the board. Both of them have value, but it makes sense to understand what your FICO score is. And there are many places where you can get FICO scores for free. The Discover Scorecard tool online, you don't even have to be a Discover card holder. You can get FICO scores there. If you are a card holder of Bank of America or Barclays or Citibank, you can get FICO scores from them as well. On the VantageScore side, Credit Karma is probably a big player that many people are familiar with. They offer free credit scores, and we're kind of early in the game to do so, but they are offering the VantageScore, not the FICO score. Capital One also uses the VantageScore. There are other ones too. Or at least Capital One uses a VantageScore in terms of showing you your free credit report. That doesn't necessarily mean Capital One's using the VantageScore when they're actually making a decision on your credit card application. So that is something that is good to know when you're seeing these scores. Doesn't necessarily mean that the card company is using VantageScore if they're willing to give it to you for free. So both credit scoring models use the same range for the most part, which is 300 up to 850. There are really just some little differences in terms of how they weight certain things. There's probably a zillion little differences, but a couple I can tell you about is that FICO, for the most part, will treat all late payments the same, regardless of what type of loan or credit card it is. VantageScore will ding you more for being late on a mortgage than your other types. VantageScore tends to be friendlier to people who are an authorized user on somebody else's credit card than FICO would be. So if you are an authorized user, you may see your VantageScore go up quicker than you would see your FICO credit score go up. So there's a reason why there may be a difference there. So you're going to see different scores for each one of these, based on how they weight things. And of course, then you also have the second layer here, which is that every credit reporting agency has a slightly different information on your personal history. So you're going to see a range of, you're going to see a lot of different scores depending on where you are pulling your score from. So I guess the overall message is here, number one, the FICO score is probably one you should pay the most attention to. But number two is the fact that with all these scores on the market, you're going to say, well, which one should I say is like my credit score? And the truth of the matter is you don't just have one credit score. Every lender is going to treat you a little bit differently. They're all going to have their own algorithm. So even if they are licensing FICO or VantageScore in order to, sort of figure out, how they feel about you, they're still going to have their own proprietary sort of algorithm that uses those things as a base, but they are still going to, kind of come up with their own score for you, even with those other existing credit scores. So to say, I have a credit score of 750 or I have a credit score of 712 or whatever it is that you may have, well, you might have gotten a report that tells you that, but that doesn't necessarily mean that there's any particular lender that is going to say that you have that exact score. So for you, what that means is whether you look at VantageScore or you look at FICO to try to track your credit scores, you don't need to obsess necessarily on what the exact number is that you are seeing. Really, the trend is what matters. Are your scores going up or are your scores going down, and why are they going up and why are they going down? I very much would encourage you to use any of the free tools that you get either through the credit cards or things like Credit Karma or related sites. But again, look at the trends. Don't necessarily obsess about what the specific score is, because it's not necessarily the score that the lender is going to use for you, even if it's in the ballpark. So that's it. Thanks for watching. Please go to ProudMoney.com, where we talk about other personal finance topics and do credit card reviews and all sorts of other fun stuff too. Thanks for watching. Bye.